Obviously,
I want it for when I like walk the lake for like my tracking app.
Oh yeah, it can do all those
mileage,
things too.
But I think I would have to turn off the texting and calling feature.
Ooh. Well, then just get a Fitbit or something.
Yeah, that's good.
Everything's
All right.
recording.
Oh,
Can you
great.
see us since me and Katie are both on one side? You can see us,
Yeah.
okay?
Okay, perfect.
Well, it's pretty early for lunch though. It's like 10:20.
Well,
you
I
can
understand.
you can call in 20 minutes.
Yeah.
Yeah, call
I
in
don't even
20.
know they're open in 20 minutes.
Yeah,
you
sure
can call
they
at
are.
10:40.
They're cooking meat right now.
They are.
Well,
They have to
they're
cook the
cooking it for
chicken.
24 hours.
She's like, they cook the chicken,
Yeah,
the
they-
gyro's spinning on this
Fine. I know their schedule. Tell Tabitha hi. Which one are you
Oh
going
wow,
to?
you go there that much.
That she goes there that much for sure. All right, let's see
Yeah,
what
they
else
open at
they.
11, so.
We sometimes pick up like 1 pound of chicken and 1 pound of gyro for the week.
Oh
And we'll
wow.
make
Like
quesadillas, salads,
Genius.
tacos.
Oh, I didn't even think about you could buy just the
by the
meat
pound.
By the pound. Oh. Do they advertise that?
It's on the menu.
It is on the menu. Okay. Yeah, that's cool.
Haven loves them in a quesadilla, like the chicken quesadilla
Yeah.
with the Greek meat. So good.
Oh my god, these are hilarious.
You were supposed to tell me the questions you
I'm
got.
telling you right now. I just got them. But here's this one.
Great.
What actually happens in underwriting, and why is it so extra? LOL. Oh.
Wow.
That's a good
You know,
question.
it does amaze me though.
How many
like,
times do we get an update that it's in underwriting, and we're like,
and why is it so extra?
yeah.
Oh my god.
But it is amazing how few people actually knows what goes on with the loan.
I feel like I'm
They're like,
a lot.
what is an underwriter? I'm like, I'm like, an underwriter's a person.
Yeah.
Oh god.
A human
this one
being.
is not for you.
What?
Why are some appraisers awful? How can we fix this? It's not a lender question. Timeliness on reports, something else. Okay. Sorry.
But you could touch on, like, when there's an appraisal delay,
Okay.
how much,
I have one that's been delayed because it's that is it River Highlands? It's down on the diversion.
Yeah.
Yeah.
Like it got turned down by like 5 or 6 appraisers.
Well, you can talk about that. That's a delay if it's a one that's
Yeah.
out of area. Like, what causes appraisal delays, and how come sometimes the appraiser has until this date to get the report back? Like, who determines what date?
We
Write
always
that
set a
down,
week.
that it's due back.
Okay.
We set a
Oh.
week,
Yeah.
and then it's kind of up to their schedule. Like, what kind of workload do they have? And if we put too short of a time frame, they can reject it. They'll
Mhm.
reject it. And we have to
Oh.
go to the next.
Okay.
So you don't want to be constantly doing like constant rush. You just
Mhm.
wear
Yeah.
people out.
That's right. Okay. This one was how do building loans work? Very confused.
Building loans like construction.
Like construction
Yeah.
loans, yeah. This is
That's
my
kind of a
favorite.
long answer.
Anytime it's something like that, it can be just like the PowerPoint version of, well, you get some money up front and then you get the rest when you
Yeah.
need it. And that's the answer to that
Interim
question.
loan.
Yeah.
Right.
Draws.
You don't have to get too
technical.
Yeah.
I
I
mean,
know. Earlier, I was trying to talk to a client, trying to explain the difference between jumbo and non-jumbo.
it's just
So I'm giving her the actual, and she's like, "All right, that's over my head." I'm like, "Sorry."
Sorry.
Yeah, stop
But you
talking to me.
asked.
Thanks for telling me. Yeah.
Like, you're like, lady, no, hey Jay.
But
can
she
you
was
do
an
me a favor?
engineer,
Yep.
so I figured she.
Yeah, I would
Do you,
want to
I
know
want to
that
make
answer.
sure the microphone is as close as it needs to be to Jamie. So if she's in her comfortable position seated, can you just make sure? If she's fine. Remember the time when Rick was here and
he was
Yeah, I mean,
far away.
He was like way back here.
okay,
Yeah, but that surprised me because he's loud
right,
and we couldn't hear him great. He's a real estate commissioner,
yeah.
so we had
He's
him,
in the commission. Jay, am I close
the
enough?
real estate police.
Everything's fine. Whatever you say.
I am just so. I was telling Jay, impressed with y'all's operation here.
Fun girl.
Like in the time and effort y'all put into this, and like how consistent
consistency
you are, and that you're
We're like the
able to
queens
come
of
up,
We are the
Consistency.
queens of consistency.
come up with the topics.
Oh my
A
god.
lot of it is listener requested. We got
Yeah.
Did you see the one we got
That's good. That's helpful.
today?
What was it?
Let me see.
No, it's not.
Yeah, it is.
What'd she say?
He said it's recording already.
No, it is.
might be.
Oh, it is.
Yeah,
But we're not.
it's all
Well,
recorded.
you just edited.
He'll cut it off.
when
Yeah.
we get to where we're
But
starting.
if we say something funny, he likes to use that for the funny clip.
Oh.
You're being recorded.
So Jay
Yes.
does all your editing, and
Yeah, he does all the editing because he
Wow.
can do anything in the whole wide world.
he's so smart.
I'm impressed.
He just got online and learned how to do it. This kills me.
Are you going to tell me these other questions?
Fine.
Or are you just going to throw them at me?
This one I'm not going to tell you first because
Damn
I
it.
think it is hilarious and it's
Yeah, let's go for
I
it.
can
Sorry.
answer it. It is not like a hard question. But sometimes I like to have a little
surprise.
surprise. I mean, it's pretty okay.
That's all right. At Trends, they cut my microphone off at the end, and I was
They were
like,
like,
Were you
maybe-
hyperventilating before that?
no, I hyperventilate weeks and weeks in advance, and then when I
Okay.
step on the stage,
You're fine.
solid
Good
as
for
a rock.
you.
It's all the anxiety leading up to it. I get that all out. So when they turned my mic off, I rolled with it, and I made a joke, and it was no problem.
You were like it was the end
I
of your
said,
Oscar
so
speech.
I guess you're telling me to get off the stage.
Right.
Like, it's time to wrap it up. Thanks. Very subtle.
Oh, I need to. This one's hard to read. Okay, different from a.
This
Okay.
question was, do you think that there is a poor time to start in real estate? This was the one today.
Oh,
Like,
that's
I've
interesting.
been an agent for 6 months and I've been fortunate to do a handful of deals. However, with low inventory, it feels like even if you have clients, you can't close them because there's no inventory. It's
There's never a
discouraging.
good time.
Yeah.
There's always a reason that it's not a good time.
Yeah.
It was a terrible time to get in the mortgage business when I started at the end of 07, but I
Oh,
didn't know
terrible
any
time.
different.
You're like, oh, sure,
I was
why
like,
not?
Kenny says it'll be fine.
Yeah.
It'll be fine.
And I know
It was
nothing.
fine.
And it was fine.
You were fine.
Yeah.
Smart. Okay, this one is
Make it
all
happen.
things buying a vacation home. Smartest options for financing. Now, a lot of our questions with the ones you already got were kind of about investment stuff.
Yeah.
Okay, because that's why we felt like we needed to have you because people kept asking us all these
Lending
investment
questions.
questions. Yeah, all these
Interesting.
lending questions.
So it had that's an interesting question now because basically Fannie is limiting their purchase of second home and investment properties.
Mhm.
So as a result, interest rates have increased.
Oh, save that for the show.
Okay. Sorry.
Sometimes we get to talking and then
I'm
we're like, stop.
No. I want to hear that.
Yeah.
Don't worry. You can do nothing wrong here,
Yeah.
Yeah.
You can't do anything wrong.
but
I'm good.
you know what you're allowed to say and not say.
Oh, really? What does that mean?
I mean, like in the financial world, can't you not, like, you can't say interest rate is this. And
Oh.
you have to be like
right.
all
Oh.
disclaimery.
Yeah, so many
I gotcha.
disclaimers.
Yeah. We're not going to have any.
why are some lenders,
violations.
I'm going to just quickly tell you these. And if you don't want to answer one, just tell me.
Okay.
So, why are some lenders' rates different than others in the same community? Have you ever heard of
Wow.
an appraisal insurance?
Appraisal insurance?
Okay, great. I'll say that. What
No,
is the
that's
process of matching rates with another lender? How do building loans work? I told you that. What actually happens in underwriting? Okay, I told you that. We talked about appraisal. Okay, what is a portfolio loan and how is it different from a conventional loan?
Yeah, that's easy.
Got it. Okay. All things buying vacation home. Okay.
So why are interest rates different with two different lenders in the same community?
Yeah.
Like when buyers get quoted, they're like,
Yeah.
well, this lender gave me this rate. Like, what's
I mean, the gist of it
discrepancy?
is.
No, don't
David.
tell me.
Well, I don't know if I should be.
Okay,
I
well,
don't know.
tell me.
I guess I'm conflicted about that.
All right, tell us. What do you want to say?
Well, basically, there's a margin, okay,
Sure.
that's built into the rate.
Yeah.
And so each company sets their own margin of what they're going to make.
Okay.
Well,
Through the interest rate,
This
so-
isn't transparent talking about how you get paid. That's important for
I
everybody.
mean, it's not how I get paid,
But
but it's how the
Companies-
company gets paid.
Yeah, for sure.
Okay.
That's important. So every company has different fees, and you probably get what you paid for.
Do you
And
want
it
that?
also depends on when you get that quote.
Yeah.
Like,
Okay.
Anyway.
Agree. That's fine. It can be just that simple.
Yeah, that's perfect. Great
All right.
answer.
Great. Excellent answer. We're on.
Not too
that's
technical?
right. No, it's fine.
Well, like if
Sound like a
they
big
got pre-approved like 2 weeks ago, and then they come to you and are like, "Well, why is the rate different?" It's like, "Well, it's been 2 weeks, and they fluctuate every day."
Right.
well, right.
You know,
Right.
So I don't know if I should just say that.
Yeah, we'll probably
Say whatever you
we'll
want.
ask you follow-up questions if we need you to.
Right.
Okay.
Okay. We're
I feel
recording.
like I'm in the hot
That's
seat.
recording. You are kind of in the hot seat.
Yeah.
Like, tell us more.
And look, it's 10:29.
We're very punctual today.
We are, and I was even late.
Okay. Are you ready?
Ready or not?
She's ready.
Do you have a toast ready?
Oh, I didn't
What?
ask you that. I'm going to tell you, I'm so sorry. The guest we do a toast at the end of every show.
Yeah.
Like, cheers to
Like,
Jamie. She was great on my last transaction. She's wonderful to work with, whatever.
If you have a mentor or an assistant,
I
that
think you
just
should
couldn't
toast
survive.
Jana.
Okay,
I'm going to tell you your toast.
Okay,
It
yes,
should be
I
Jana.
agree. Well, I
and
mean,
then you have to
she's-
say why.
She
you're
did all
toasting.
that.
No, hell no. But she's in.
She's in your answers.
She's in my. How do you survive?
Oh,
Perfect.
so you can.
she's at the.
when we
are we going in
toast to
order?
her,
Yeah, we can
probably
go
not.
in.
Okay.
We'll see.
When we toast to her, when you say, you can just say why she means so
Okay.
much to you.
Okay.
She puts up.
You
on
have
me.
them in order though. That's fine.
I
I'll
do,
try.
but-
I'll just try and stay in order.
Okay.
Okay.
Okay. She's just clapping for. She doesn't
I love
need
to
to.
clap.
Okay.
Hi, y'all. Welcome to Hustle Humbly. It's Alyssa and Katie, and we are two top producing realtors in the Baton Rouge market.
We work for two different companies where we should be competitors, but we have chosen community over competition.
The goal of our podcast is to encourage you to find your own way in business.
So stop comparing yourself and start embracing your strengths. Hey, Alyssa.
Hey, Katie.
We have merchandise.
Yay!
Can you believe it?
What do we have?
We have a mug. So cute. The mug is my favorite.
Mm-hmm.
We have a tumbler.
That's my favorite.
That's the one you love.
And a sweatshirt is my favorite.
Oh, the sweatshirt's cute.
I live in a sweatshirt because my husband keeps the air on like 65.
So you need it for the summer.
Yeah.
And then keychains.
Okay.
Like wrist strap keychains. So like if you want to put it in your lockbox.
Oh, that's neat.
I really like whenever I go to a showing and I can put the key on my wrist and then I don't worry about locking myself out.
That's awesome.
So nice. So we have all of those things. Mug, cup, keychain, t-shirt, sweatshirt.
Love it.
All with the cute little logo.
Perfect.
I know, it's so fun. So you guys go to hustlehumblypodcast.store.
Happy shopping.
Happy shopping.
Hi. Hello, everyone. This is episode 99.
Oh my gosh.
Almost there.
And today we have a guest. Yay.
Yay.
I can't believe we've gone almost 100 episodes without a lender.
An actual human lender and in studio, no less.
Not a Zoom interview, a real
Live interview. Okay, so guys, today we have Jamie Taylor, and she's going to tell us who she is.
Hello, everyone. Jamie Taylor. I'm with Assurance Financial in Baton Rouge. I've been with the company and in the business 14 years.
Wow.
So I have been with one mortgage lender the entire
whole time.
I relate
I've been
to
in the
that
business.
because I've been with one real estate company all 10 years.
We're loyal
I've met
people.
Very loyal.
Loyalty. Is Assurance national? What's their
Yeah, so
area.
it's locally owned and operated,
Okay.
founded right here in Baton Rouge.
Okay, it started in Baton Rouge.
It started in Baton Rouge.
Okay.
We are in almost 50 states at this
That's
point.
amazing.
So we
That
have
is awesome.
several offices, but everything happens, all the magic happens right here in Baton Rouge.
Right here.
Underwriting,
Oh,
funding,
I
everything.
feel
All of
like
that.
local is so important.
It's super important.
It is.
But you service now, Jamie.
Mhm.
Which states do you do?
So Texas,
Mhm.
Louisiana, Mississippi, Alabama, Florida, Georgia, Tennessee.
Wow.
But I can pretty much get licensed in almost any state.
if
I
someone
need to.
needs you.
Mhm.
Okay.
Yeah.
I will add a disclaimer that you are my favorite lender.
Yes.
You have done my loans for my clients for many years, lots of years. Probably,
Yeah,
almost-
probably 12.
yeah, I think so.
12.
And, we get taught in real estate school and classes that you're not supposed to just refer one,
Right.
lender, inspector, title company, whatever. So I do have others on my vendor list. But if someone puts my feet to the fire and is like, I'm like, please call Jamie, because that's who I know is never going to give you a pre-approval that isn't true. She's going to make you give you the docs to actually get it done. You always make your deadlines. You're very transparent. So you're
Right.
like, well, if I'm concerned about this, I'm going to tell you.
Yes.
And that's
And I care.
huge.
Yeah,
You
yeah.
actually
You want to
care. You take
Cares.
good care of my clients. So
Sure.
we are sitting here at my desk with all of my assurance pens
There you go.
and my assurance mouse pad. And so fine. Jamie is my lender. Y'all say what you want. Having a lender that you trust is huge
Mhm,
for your real estate
definitely.
business. Okay. So we have all sorts of rangy questions.
Bring it on.
We're
I'm
just
ready.
going to go in no particular order and see what you want to tell us.
Okay.
Okay, number one, where to find financing that isn't under Fannie Mae, Freddie Mac regulations.
And what is that?
And why?
anyway?
What's the
What is
point?
that?
Yeah.
Okay, so y'all going to make me get technical and complicated.
Not too technical.
And
Yeah,
bore
yeah.
your audience.
This
So,
Yeah.
right. So Fannie, Freddie, you want to go typically to a local bank that has what you would call a portfolio product. And what that means is they're lending basically their own deposits.
Okay.
They have money available to lend. They would set the guidelines. They would hold and service that loan.
Because it's their money.
Because it's their money.
Okay.
Why would somebody not want to just get like so Fannie and Freddie is like FHA, RD, conventional loans,
VA.
VA, like
Well,
your regular
Yeah,
loans
it's all,
that we're
well,
all
those
used
are
to.
mainly conventional loans.
Okay.
Right. So Fannie and Freddie set the guidelines.
Okay.
All right. And they purchase the loans.
Okay.
Okay. And they securitize them and sell them on the secondary market. It helps lenders like us, even the big banks, have liquidity, have the money available.
Sure.
Because we don't all have this endless pool of money
Right.
that we're lending.
Okay.
So when y'all sell the loans, that's how you get money to do more loans.
Correct. Exactly.
Ugh,
Exactly.
Just like
Fascinating.
fascinating.
Someone would do a portfolio loan because they can't fit into the box of that Fannie and Freddie set.
So Fannie and Freddie are specific to conventional?
Yes.
Okay. Because VA, FHA, RD, that's different.
Well, Ginnie Mae, typically.
Oh,
So it's still we
I
know
never,
Fannie.
I never heard
It's
of Jenny.
still-
So there's Fannie, Freddie, and Ginnie, and those
Right.
are the loans that we're all used to. Your typical is it
Right.
FHA, RD, VA?
All of them are
conventional?
sold to those entities.
and they all have those
and
guidelines.
securitized. And yes.
Okay.
But
Well, each
maybe
loan
someone-
product has a different guideline.
Sure.
But those entities, FHA, VA, USDA, Fannie, Freddie, they're all setting the guidelines for
Okay.
the
So if you
loans.
have maybe a buyer that recently started a business or tax transcripts that don't fit in a box,
Right.
that's why they would want to go outside of this box.
Exactly.
And,
And
get a
then you're talking
portfolio
about
loan.
a local bank typically.
Typically.
Okay.
Yes.
Someone did ask,
Interesting.
what's a portfolio loan and how is it different from conventional? And you just
There you
answered
go.
that.
Yeah.
Those loan products typically aren't going to have the same terms. Okay. They're going to
Okay.
have typically a higher interest rate.
Right.
Maybe a balloon payment. The interest rate's only set for so long. Let's say
Okay.
5 years. A shorter term, like a 20-year term.
Oh.
So, and then, yeah, sometimes they may be required to refinance it in a year. I mean,
Gotcha.
so it's not, I guess, ideal.
Well, it's
right. But it
sort of
fills
what-
a need.
It's like a worst, like
Until-
if you can't
Yeah.
fit into the box
Yes.
and you still want to get a loan,
Yes.
there's an option.
I just had my first client do an adjustable rate mortgage.
Oh, really?
And I was at the closing table, and
Mm.
the title attorney was like, okay, well, this is your payment. Well, and I said, you did an adjustable rate? And he said, I did. And I said, why?
Mhm.
He said, because my job is only going to keep me here for 7 years,
so it didn't
and
matter.
the rate is locked for 10 years.
Right.
And I was like, wow,
right.
that's so smart.
Right.
I,
I mean, it
never
does make
even,
sense.
and how many people stay in their house longer than 10 years?
Right. It just has to make sense. The interest rate has to be good enough to roll the dice on the risk.
Right.
Okay. So it's
Yeah.
not, the adjustable rate mortgages have gotten a bad name.
Yeah.
But
for
they're
the
not
right
bad when
person-
used in the right situation.
Right.
Interesting.
I mean, my first mortgage was adjustable. I was probably one of the only success stories of the whole 2005 ARM crazy mortgage lending. Like, I just didn't have great credit. I couldn't get a regular loan. Like, I got a 2-year ARM, and after having a mortgage for 2 years that I paid on time, my credit was much better. And then I refinanced.
There you go.
You might have refinanced
Yeah, I think
it. That was 2007 in a no doc loan. Remember that
Oh,
those
wow.
days?
I can't even remember.
Anyway, but I refinanced and then I was in a 30 year and it was more stable, but because it could have been very bad. And that's what happened. A lot of people got the adjustable. We're not going to
Right.
get deep into that. Did you ever, this is such a side note. Did you watch the movie, The Big Short?
I did.
Did you find that entertaining?
Yes. Well, obviously it was hilarious, but sad at,
It's sad,
points,
but also
that was kind of predates me.
a little bit.
Yeah.
You know.
Okay. So you weren't
Yeah, a little
involved
bit.
in that.
I was entering at the tail end of
Yes. So I
when
got my
everything
license
hit the
in
fan.
2005, but I didn't sell to 2006. So it was starting to already to
Yeah.
go away.
Mm-hmm.
Okay. What is the difference between a mortgage lender and a mortgage broker?
Right. So they're all great, right? But so the difference is a broker, I guess I kind of say they're a middleman because they're not underwriting and funding that loan. Okay. So a broker may have, let's say, 5 different lenders
Okay.
that they send their files to be underwritten. And it's not going to be the broker's money at the closing table.
Okay.
It's going to be the lender sending the wire.
Okay.
Okay. Whereas a lender is the one who's underwriting and funding the loan.
Okay.
So assurance is a
lender.
lender.
You're a lender.
Correct.
Are there any brokers that shop you?
Any brokers
Like I know that
shop-
there are brokers that could say, "Oh, well, I'm going to put you with."
Oh, I got you.
this
Yeah, we're not a
company.
wholesale lender.
Okay.
I understand what you're saying.
You just
No.
do your
so
own.
we don't have brokers that come to us
Okay.
to underwrite their loans.
Got it.
Yeah.
You just do all your
But
own
there are
stuff.
lenders that also offer that service to brokers.
Does
Yes.
it bother
We
you
just
that
do our
the
own.
names are basically transposed in like vernacular? Like,
Right.
do you want to be called a lender? Do you care if people call you a mortgage broker?
Well, I don't really care, but I do correct people
Because
Yeah, it's not
you're
right.
a lender.
because it's not technically
Got it.
Yeah.
correct.
Right.
You know,
Okay.
but it's not a slight to the broker.
It's just like they're
It's
they're
just what you
used
are.
interchangeably, but there is a difference.
There is a difference.
Got it.
Yeah. But we're still able to shop interest rates. I know that's the big thing that brokers will tout is that they're able to shop various lenders. But
You
we
can still
also
do
do
that.
shop because we sell
Got
mortgages
it.
to lenders as
Mhm.
well as hold and service them.
That makes sense.
I feel like I have a question about that.
Okay.
So, when you shop interest rates,
Uh-huh.
what does that really mean? Because I've always
Yeah.
understood that the government tells you every day, these are the interest rates.
Mhm.
So, how is it that lenders are competing so much?
Right. So when I price in my system, okay, we have probably, I don't know, at least 20 different investors that we lock loans with and end up selling them after we've funded them.
Okay.
Okay. So they're on our books and
Mhm.
then we end up selling them to those investors and they each put out their interest rates for the day.
Okay.
Okay. So that's determined by how much money they want to make
Yeah.
off of the transaction.
So, if
too.
there's 20,
right.
do you just choose the lowest? Like, what
Exact- yes.
determines?
Yeah.
Yes, we would
Yes.
choose and offer the lowest.
Okay. So,
That's
How big is
offered.
the span?
yeah.
Maybe an eighth of a
So it's
percentage.
really
You're not
close.
talking.
It's tight.
Yes. So
Are there any times that you would choose a higher one for a reason? You know, like you get better service or something like that. Is there a
no,
reason?
because it's in our case, it's our underwriters underwriting the loan.
Yeah.
So it's all our people.
Yeah.
The only reason I would potentially choose a different one is maybe on a jumbo loan
Okay.
because they have their own specific overlays for that product,
Uh-huh.
and the client may not fit into the box of a certain investor. You know, we may have to go with one particular investor. It's a kind of a different
Mm-hmm.
ball game with the jumbo loan.
Okay.
So
We are
if you
locking
went to your
specifically with them.
20, your list of 20,
Uh huh.
and I'm just for easy numbers, 4% was the lowest.
Right.
And you tell client, okay, I can get you pre-approved, 4% interest rate, and they're like, well, so and so said 3.8. What can you even do at that point if you already chose the lowest? You know, like how?
Right. Well, I would say, look, you need to get detailed estimates. Always encourage people get the detailed estimate because most of the time when I ask, well, did they send you an estimate? They're like, no, they
Would this
just
be
told me this
the-
over the phone.
Fees worksheet.
Yes.
Okay, so ask for a fees worksheet.
Alyssa
Ask
is
for a
real hot on
fees.
her fees
I always ask
worksheet.
for the fees worksheet.
Get
Shouldn't
the
need that.
detail. Get the
And what if
detail.
some lenders refuse to give it to you.
Yeah.
Well, then you want to move on.
I agree.
Uh huh.
Yeah.
I
That's
would-
not
I
a
would
lender you're
Not good.
wanting
That
to
doesn't
work
feel
with.
super transparent.
No.
Okay.
They need to give you all the details.
They need to give you all.
Yes.
I tell my clients all the time, tell me if this is the wrong thing to say
Okay.
or if I need to tweak it. I say buyers focus so much on the interest rate
Mhm.
because that's what they're taught. Who's
Right.
going to give me the lowest rate? Who's going
Right.
to give me the lowest rate? But until you know what fees they're charging you,
Right.
nobody really asks about the fees and are
Right.
they reasonable? Are they in
Right.
line? So until you get a fees worksheet, you don't know what you're paying.
It's not
for that
apples
rate.
to apples.
Exactly. Because some lenders may just, or loan officers, may just quote everything with a 1% buy down fee or discount point.
Mm.
Okay.
Yeah.
And so, yeah, they, on the surface,
The
their
rates
interest
look
rate
great.
sounds lower, but
You pay
the
for
fees
it.
are much higher.
Yeah.
Does that even make sense to you? It may
Right.
take you 5 years to break even doing that.
Yeah.
Mhm.
And it may not make
Mhm.
sense, or you may not be comfortable bringing that much more money.
But
to
because
closing.
buyers don't know to ask about fees, there
Right.
are lenders out there that are just trying to get the lowest rate to secure the client.
Exactly,
it's all
because they know
optics.
that's what a lot of clients are focused on. is
Exactly.
all rate.
Right.
Yeah.
And we are here to educate
That's right. That's
that you need to ask about fees and interest rate together
Mhm.
Right.
so that you can compare
Okay, well, this
apples
leads
to apples.
Yes.
because it's not apples to apples until you see that.
That's right, because, we can all quote with a discount point.
Yeah,
Sure.
right. Okay, that leads right into this. Why are some lenders' rates different than others in the same, it said community, but area, like location? Like,
Right.
what would make your rate different than the next guy? You know what I mean?
Right. So I always encourage people to get estimates on the same day.
Mhm.
Okay.
I mean, honestly, rates can change during the day.
Mm-hmm.
Yeah.
Okay. So it needs to be basically at the same time, within the same day. It's probably fair enough. It's probably going to be really comparable and apples to apples.
Okay.
So that would be one thing. Two, again, we're talking about fees. Is this a lender, quoting with a discount point? That would be another reason.
Okay.
And I mean, the truth of it is too, there's a margin built into the rate where each company sets what they want to make. And so there's a little bit of difference there.
Do you mind explaining how do lenders get paid?
The
How do you
companies
get
in general
paid?
or as a loan officer?
Both, maybe. Like, how do
Okay.
you get paid as a loan officer?
Right. Well, my company pays me a certain percentage based
Of
upon
the-
the loan amount.
Okay.
That's how we are paid. We cannot be paid according to the terms of the loan.
Okay.
So our pay cannot increase or decrease based upon the interest rate we're offering.
Right.
If that makes sense.
Because you want to give the best to your client, and if
Correct.
you were motivated by that, then you could
Right.
be giving them a worse
exactly.
deal.
Right.
That makes
And
sense.
it used to be that way where
Where if you had
loan
like a
officer
higher
comp,
interest rate,
yes,
oh.
was exactly, we were paid based upon the terms of the loan. That's illegal now.
Okay.
It also can't change depending upon the loan product.
right.
It can't?
It cannot.
Okay.
cannot.
So you get paid the same no matter what type of loan it is.
Correct. Because
Oh. You don't wanna
otherwise it would
push.
cause steering, right?
Right.
You would steer, not
Like,
everybody would, but some people would
Sure.
steer
Yeah.
someone into a loan that might not be the right fit for them.
For them. Okay. Oh, I'm so glad
That's
you
a
said
good
that.
one.
Okay. So one of the things that I tell my clients when they're asking me who to work with and why I always recommend you is that I feel like you take the time to explain to them what is the difference between FHA, RD, VA, conventional, why maybe you can still have a 3% down payment on your conventional versus your 3.5% on FHA. Or like, I feel like you take the time to help them find the right fit for what their goal is.
Right.
And some lenders are just like, what's the easiest thing for me to do today? Like,
Right.
oh, well, this is easier. You just go do, FHA or whatever.
Right.
So that really isn't a question. That's just my side
Oh,
note.
thank you. Yeah.
Thank
I mean,
you.
I talked to a client recently, a new client of mine. He's currently in an FHA loan. And he asked why I wasn't recommending an FHA loan this go round. And so I explained it all. And he's like, well, I never knew that. Like, that was never.
Mhm.
No one
told to me.
explained it before.
Yeah, like how long are
You
you
know.
going to be in this house? How much do you have to put down?
Well, the
What's
interest
your
rate's
goals?
lower.
Yeah.
Because
A lot of
people are
times
just
on
like, well, I'll just
FHA,
do the lower rate.
And if they're focused on that, I have to oftentimes explain
Mm-hmm.
that's not the whole story. That's not the whole picture.
Right.
Look at the
Mhm.
PMI. It's on there for 30 years,
Yeah.
and then compare it to the conventional loan that has a slightly higher interest rate.
right.
So you really have to give them the detailed fee worksheet,
Yeah.
and explain all of that.
Okay.
And you get paid from the income. Y'all get your company gets income once you sell the loan.
Yes.
Is where the income comes from.
Correct.
Okay.
And the fees,
Well, we have
right?
fees.
They have
we do have fees that,
Fees,
know,
so
underwriting,
that's where
processing,
the two
closing.
sources of income.
yes.
There's fees, just like we have fees.
Correct.
Right.
And then when you sell the loan, there's income from that for the company.
We either sell it and we make a certain amount of money when we sell it to the investor, or we hold it and service it. And it's basically, that means it's been sold to Fannie or Freddie.
So if they hold
and we
it
make
service
servicing
it,
right.
well,
Yeah,
and then
servicing
you're
right.
making the money off the interest on
Correct.
the loan.
Right. It's a longer term play, whereas if we sell it, it's just kind of a lump sum payment.
What would make y'all keep it versus sell it?
Well, last year we decided to service a lot of our loans because the investors were so overwhelmed with
Okay.
the influx of
Yeah.
loans that they artificially inflated their pricing and their interest rates.
To slow it down.
Correct. So we had to service them to be able to offer the most competitive rates. Otherwise, it's somewhat complex. They
Yeah.
have a consultant
Yeah.
that helps them decide how much they should be servicing
And
versus
how much to
selling.
sell.
And it's a cash flow
Yeah.
issue too.
This is high
You get-
level.
it is.
Yeah, that's really interesting.
Yeah.
though.
Very, very.
I heard that they even look at each loan individually, like credit score, what kind of buyer are they buying by investing in this loan, and that also determines how much they would pay for it.
I mean, I know they don't want to service loans that it's not going to be a fairly long-term
Sure. Less money.
hold for that buyer because they're
want-
making money over time.
Yeah, and so you don't know what. Yeah, if you're going to turn around and sell your house in 2 years,
Exactly.
they'd rather
That's
just
not
sell
really
that loan.
something that we would want to
So they'll
service.
pay more for a 30-year than a 15?
You're talking about the interest rate?
Like if you were selling a 30-year loan or a 15-year loan, which one would the investor want to buy?
Oh, that doesn't really
Oh,
matter.
okay.
I'm saying as far as servicing.
I see.
If someone's only going to have their house for 2 years,
Mhm.
we're probably not going to want to service that loan. We probably would sell it to the investor.
because you can't make.
But how would they know?
Well,
People will tell
people
me.
will.
Oh,
They
and
will.
you make a note in the file?
Yeah, I'll ask them. I'll say, look,
How long are you
they're
going
probably
to be
not
here?
going to.
Yeah,
Oh, I didn't know that was taken into consideration.
I love it. Okay,
Interesting.
But people will take it personal if their loan
if
is
their loan's
sold.
sold, oh, I've had them do that
I-
before.
It was
Yes.
what y'all sold us, and I'm like, "What? I'm sorry, it wasn't personal. It's just part of the business."
And they sign the
Of what?
docs, like, and
Yeah.
are told your loan might be sold, and a lot of times
Yeah.
they're sold right away. Okay. What is hard money?
Yeah.
So hard money is basically either private, individuals or private investors or companies that lend their own money.
Okay.
So this basically has nothing to do with Fannie Mae, Freddie Mac.
It's
you're
not,
not
even
going to
a portfolio.
No, it's
It's
not a
just-
bank.
It's
Typically, it's not
just
a
person.
lender of
Just
any.
an individual.
Correct. Usually, you're
Oh.
not going to see someone get a hard money loan unless they're doing some type of investment
Okay.
purchase. Usually, it's more of a short term kind of loan.
Okay.
Maybe someone would do that for a flip. Maybe they.
Where do you find those?
I know. Do you basically just go to a wealthy friend?
Honestly, I really don't know.
So interesting.
It always has a.
We don't have a lot of that in our
I
market.
wouldn't say shady, but I just don't know a whole lot about it.
I'd be a little
And
nervous.
the interest rates are usually very high. Maybe someone can't qualify for a line of credit or something with a local bank,
Mm-hmm.
which is really I don't know why else you would do a hard money loan.
Yeah, unless you
because-
just didn't have money. I think
Right.
what I have gathered from our listener questions
Okay.
is that there are a lot of real estate investing
Yeah.
podcasts out there
Okay.
that
Oh,
are
they
like,
tell you to go
if
get
you
hard
don't
money.
have any money,
Get the hard
that's
money.
okay. Go
Right.
find someone to just give you money. And it's very high risk. They make
Right.
it sound very glamorous, but it's
Uh-huh.
actually you need to be very careful.
What sounds too good to be true
Could
usually
It usually
Yeah.
is.
Yeah.
Yes.
Okay, moving on from the hard money.
Interesting. Hello, friends. We are so excited that so many of you are using the template course, and the reviews are just pouring in, letting us know that it has helped your business as much as it has helped our business.
Yes, listen to this review. Thank you so much for providing this wealth of information, knowledge in template form. So far, I've used a handful and received positive feedback like, "This is so professional," or "I really appreciate how organized you are." I mean, can you imagine?
Yeah,
Your clients
it's all
are actually
there.
going to say that.
Yes.
All right, here's another one. Thank you so much for this. I can't tell you how many times I've started this and how many notebooks of samples and notes I had. I have ADHD and it is super hard to stay focused on getting it done. Having it all in one place is going to make it so nice.
That is what we're here for.
I know, just look, you don't need to reinvent the wheel. Just
Yeah.
use these.
Yeah, nice and simple, easy, ready to go, ready for you to put your own logo on, make it sound like you. So head over to hustlehumblypodcast.com/course and check it out.
That's right.
And you're going to enjoy them. You're going to love them.
You're gonna
It's going
love
to
it.
change your life.
Literally fired my assistant. They are the best. Okay, bye,
Enjoy
friends.
the template.
Yes, enjoy.
Okay, price range. This is like I don't know, just like a sample. Price
Okay.
range of 300,000 house, and all terms remaining the same. How does the interest rate change affect that? Like a sample of if
Mhm.
your rate increases X,
Right.
your
Payment
payment goes
increases.
up this.
I think this is an important question because everywhere you look, everyone is screaming from the rooftop, interest rates are low, buy now.
Right.
But what does that mean?
Right.
like when is it hot? Right, like if it went up half a point, like percent.
Right.
Yeah.
So
well, how does that affect me?
a $300,000 loan, if the
Mhm.
interest rate increased about 1%, you're talking about $150, $160 a month.
A month.
A month.
Yeah, for a whole percentage point.
So if you
It's pretty. I mean, that's a pretty significant increase in the rate, And if you're buying a $300,000 house, I don't know how material $150, $160.
I was going to say,
Right.
would
If it is
would it
very
really be like
material-
$375?
Well, you shouldn't probably be
You know what I
buying
mean?
that price house, if you're that uncomfortable with
Right. If,
$150.
Yeah, for sure.
if you don't
But-
have $150.
Right.
But I guess the question is, if rates are low
Mm-hmm.
Mhm.
right now, and you're saying, oh, well, you could buy a
Buy now.
$300,000 house right now, but if you wait until the fall when the rates
Oh.
go up, that
What's the equivalent note?
that
what price range?
$300,000 house becomes $250.
Right. Yeah, probably.
You know?
So the difference would be, it's $5 for every 1,000.
$5 for every 1,000.
Approximately.
Correct.
Mhm.
Okay. So that's interesting. So let's see.
That
If it was
30,000.
150, or wait, no, what am I doing?
Mhm. I don't know.
$150
What
a
are you
month
doing?
divided by 5.
$30,000.
Right.
So instead of a $300,000
Right.
house,
You
you
gotta
can
looking
get
at
a
270.
270 and
For
your
the same
note's
note.
the same.
Right.
But-
Exactly.
right.
That's a big difference.
It's a big difference. Yeah. If you're,
Especially
If
in
you're
that
at your
price
top
range.
of your price range,
Yeah.
Yeah.
at 300, like you're at the top.
Right.
Well, then yes, you probably would only approve for a 270 loan.
with a rate increase.
Correct, of 1%.
That's interesting.
very. Okay. When people are, there are a lot of questions about investment property.
Okay.
When people are buying investment property, what financing would you use?
Okay.
And can you finance if you're an LLC, or do you have to pay cash for those?
So I recommend just your traditional Fannie or Freddie if you're able to qualify for that for an investment property.
Okay.
You can't purchase in an LLC.
Right.
You have to purchase in your personal name, but you can transfer title into the LLC after closing.
Will
I've had
the
some
loan
clients
allow
close, and yes, it is allowed.
The loan allows that.
It is allowed. It
Okay.
is in Fannie's guidelines that it is
If you
allowed.
do 20% conventional, you can.
Well, you can do 15% down for an investment property.
Oh, I didn't even
You
know
can,
this.
but the rate is much higher. There's
Oh.
PMI. I only have had
Well,
a few
yeah.
people do that. Most put 20% down. The sweet
Yeah.
spot is 25%
Oh.
for interest rate and
I didn't know
everything.
that.
But
Oh.
you can transfer title
Mhm.
into an LLC.
Mm-hmm.
That's interesting. Okay.
Yeah, so you don't have to have cash.
Do you have an opinion on what this one was, a vacation home? What would be the smartest financing options on that? So it sounds like 25% down.
So you can put 10% down on a second home.
Okay.
And that's if you're like, a second home means you're not renting it out.
Correct. It is really more of a true vacation home,
Mhm.
or, I actually just had clients that are closing Friday on a second property here in Baton Rouge. They live on the North Shore,
Okay.
but the husband is always commuting here for work.
Right.
So that is a second home as
Second
well.
home.
Mhm.
Yeah, they're not
Yeah.
renting it out. And
Right. But
Okay.
recently, Fannie and Freddie are limiting their purchase of second home and investment properties.
Okay.
As a result, interest rates have increased for both of those
For that type
occupancy types.
of. Mhm.
In the past, second home and primary residences have been the same interest
Oh.
rate.
All the time?
Yeah.
Really?
Because
Yeah.
it's just like buying a house.
It's
For
a
you,
owner occupied.
Yeah.
Exactly. But now second
Ah.
homes are higher than primary,
Oh.
but not as high as investment. So they're kind of
Oh.
in between.
That's interesting.
Mhm.
And what was the reasoning for that
Well,
increase?
The rate, because Fannie and Freddie are limiting the amount that they're going to purchase,
But-
which from like 15% of the portfolio to 7%.
Was there a
so-
reason for that?
So
It's
according
because
to
there's
them,
not enough inventory.
well, according to them, their primary reason for existence is to promote home ownership. They never
Right.
were really created to
For
help
investors.
investors
Yeah.
or people that can purchase a second home.
Right. They just want to
And-
make sure everyone's in the house.
Right. And so they want to primarily focus
That
just
makes
on
sense.
primary residences.
On that note,
Mhm.
say you buy a second home,
Yes.
get the second home loan,
Okay.
and 2 years later, you decide to start renting it out.
Yes.
At what point is that a problem?
Well, I mean, it's really not
Okay.
a problem as far as I've ever run into. I mean, you're signing documents, at closing saying you're going to occupy it. Usually it has language in there that says you're going to occupy it for at least a year,
Okay.
certainly for primary residences.
Sure.
So, I mean, you just need to be honest, right?
Yeah, for
I mean,
sure.
if you're going to decide to rent it out, I mean, there's no issue there
Okay.
as far as I've ever run
Mhm.
into.
Interesting.
Okay. I think that's all of second home questions.
Okay.
Okay. How can realtors make your job easier, Jamie?
Yes.
Come on, tell us. We want to
Yes.
make our people better.
Yes.
Yes. Okay. So
Help us help you.
sounds wonderful.
We're here for it.
You need, certainly the sooner I can talk to a client and get them pre-approved before they start looking at homes, the better.
Oh my God.
I like that you agree with that because
Yes.
we for sure agree
Yes.
with that.
Absolutely. Because especially in this market, you have to act quickly,
Right.
right? If a buyer sees a house and they want it, you have to put in an offer quickly.
Right.
So you need a pre-approval letter, right? And it needs to be solid, a solid pre-approval letter. I don't want to risk my reputation as a
Right.
lender by sending a letter that isn't worth the paper it's written on.
Okay, good. Because the next question is part of that. What do you require before you give the buyer a pre-approval? And then you can keep talking about what
Okay.
realtors can do to help you.
So I need to take the full application, full
Okay.
credit. I really want income and asset documentation. Okay.
Like paper, documents.
Yes, paper like pay stubs,
Like
W-2s,
Can you give an
Self-employed,
example of
we have
asset
to-
documentation?
bank statements.
Bank statement.
Bank statements.
Okay.
Yes. I need to verify you have the money
Right.
for the down payment if
Okay.
one is needed. If someone has overtime
Mm-hmm.
and we need overtime to qualify them for the loan, sometimes I need to order up front an income verification from the employer.
Yeah.
Okay. Because we're going to average that over typically a 2-year history. And so I
Oh.
need base and overtime broken out.
So you
Okay.
need pay stubs and bank statements ASAP
Yes.
because you will know from the pay stub if they're getting overtime.
Correct.
Because I've had situations where they said, yeah, he makes that much, but 30,000 of it is overtime and we can't count it because it's not guaranteed or whatever the
Right.
case may be.
Right.
So y'all would know that from looking at a pay stub.
Yes. We would.
Okay.
We would. But we wouldn't necessarily just from a pay stub know how much of it we could use.
Sure.
So we could need to order the income verification. That takes time.
Yeah.
I'll oftentimes get asked from a client before they put that application in, how long is it going to take to get the pre-approval?
Oh my gosh.
You know, as if it just can be turned around
Right. Like the
in a
machine's
minute.
going to tell them
Yeah.
when you're done.
The machine is Jamie.
Yeah,
Jamie
Jamie's
needs
the
time,
machine.
you know?
Right.
And sometimes there are factors involved that have nothing to do with me. We're waiting
Yeah.
on an employer to fill out an income verification. And if you're in a hurry to put in an offer, that could be a problem.
Yeah.
Also, I need, and this is just like an additional service, but very important. I'm going to look at the credit score, not only for approval, but can I increase their score
Right. Before
to
you-
help them not
Mhm.
only get approval, but to get the best interest rate possible. Pulled a credit report this morning. The lady had a very small medical collection that was paid from 2016.
Uh-huh.
Her score was a 690.
Mhm.
Not a bad score.
Right.
But I go in there and I simulate getting that collection deleted, and her score's a 770.
Wow.
You're talking significant difference
Yeah.
in the interest rate.
Yeah.
That's
And
huge.
she's ready to put in an offer on a house right now.
Mhm.
So, not that she couldn't still get approval, but ideally we would have worked those things out in advance.
Right.
How many times do you get a call from an agent that says, we just saw a house and we need a pre-approval letter right now? Does that happen?
It does happen, but
Have you
I-
trained your agents? She,
I wasn't
Like,
going to
you
use
have
that
to
word,
train
but
us.
I was going to
You
say,
have to
I'm
train
well
your
trained.
agents.
I would never call Jamie and be like,
We
I'm
train
gonna
our
just-
clients. You
Yeah.
train your realtor.
Right.
Yeah.
You know,
You
that's
gotta
how
train
it
them.
works.
right.
And we're here to help that.
Like, that's not appropriate for them to call you and be like, I need an approval right now.
Right.
I always get nervous to send the application link to clients.
Why?
Because I feel like they get overwhelmed halfway through
Okay.
with questions like asset documentation or fancy words that they're not really sure what it means, or say they put 70,000 income but it's really 55 because
Right.
of overtime. Like I
Well,
feel
that's
like
why you
I
have
don't
to get the pay stubs.
Yes. So
and
I think I get
W-2s.
nervous feeling I have found my success
Mhm.
rate with them completing the link. I can't tell you how many any link from any,
Yeah.
you know, I know every lender has a system
Right.
they use, but I can't tell you how many times from all different lenders I've heard, well, I see that they started the application.
And they didn't finish.
But
Right.
so many times it's not finished. And so sometimes it seems like it might even be easier to do it over the phone. But I know that's hard on y'all because it's more time.
I always give them the option. So I
Okay.
always have the conversation first, and I give them their option.
Do you feel like you get better information over the phone because you can ask them those questions that the computer system wouldn't know to?
Not necessarily. Some people they love the online. Everything
Yeah.
is online nowadays,
Yeah.
you know.
The millennials should like be more into that.
They
than-
do. We will have reviews after a closing. Love the online
Mhm.
system and option. Everything
Yeah.
was e-sign. It was super user friendly. And so they like that, but not everybody does.
Right.
So
But you
always
give
give them
them
the
an
option.
option.
If they submit, online through the link, I'm still calling them and I'm
And
going over
the
everything.
application.
Yeah.
Okay.
Yeah.
It just saves some time
It
on
is-
your end
yes.
inputting information.
Okay.
Yes, it is
Yes.
more efficient,
'Cause
honestly.
they can-
And then sometimes people, if an agent meeting a client on the weekend, they may just say, look, go ahead and submit online.
Yes.
If I'm not available or
Yeah.
whatever.
Okay. Any
It's
other?
nice to have options.
It's nice for options. Any other things realtors need to do?
So if you are trying to close very quickly,
Mm-hmm.
I would say before you write up a 2-week closing,
Yeah.
to call the lender
Right.
and make sure it's doable.
Okay.
I have one where we're closing in 3 weeks. We probably could have closed in 2, and it actually helped the buyer,
Get the
Win.
yes, over a cash offer,
Wow.
which is huge, right? But you don't want to
you can't
cause a bad
you can't
situation.
overpromise.
Exactly.
Yep.
So, because let's say you have a self-employed borrower who, right now with COVID, guidelines,
Mhm.
they have to provide so much documentation. That would not be one that I would recommend.
Right.
Do fast.
a 2-week closing. So it's
Okay.
doable with the right, lender, but talk it out in advance.
You need to have communication with the agent.
yes,
Okay.
absolutely.
Because it changes also from month to month on how quickly you can do things, right?
Yeah, it just last year I would have told you, no way. Can we do a
Yeah.
2-week closing?
Mm-hmm.
Okay.
But now it's more doable.
All right. What questions should listing agents be asking in order to vet a buyer's pre-approval? So you've kind of told us what you do to create your pre-approval, and they're strong.
Right.
But if we get a pre-approval letter from a lender maybe we don't know or we've heard of, what are the things that you can ask to vet that letter?
How do we know it's good?
So first, I think it's always good to make sure the buyer's okay, right, with the lender sharing information. I had a call this morning from a listing agent who received an offer and pre-approval letter, and they just want to know, how confident are you in
Right.
this approval?
Mm-hmm.
Yeah.
And these days, it's almost great because there are so many multiple offer situations. If I can just upfront call the listing agent,
Yeah.
hey, you received an offer from my buyer. I just kind of
Do
want to
you
give
do
you.
that?
I've offered.
That's amazing.
I've offered. Also share my reviews. Send that.
Yeah.
To the listing agent. Look,
Mm-hmm.
definitely need to be using a local lender,
Right.
someone who has a good reputation. Here's my reviews. So they can feel confident. But specific questions, I would say, because it's kind of a sticky situation with what we can share
but
or
you
not.
could say,
But
have you actually reviewed their...
Have you pulled credit? Is the
Right.
credit report going to be valid through the closing date?
Oh.
That could be a good question.
Wow. Let's taking notes.
Yeah, because when we pull, it's good for 4 months. Well, someone could have been pre-approved
And looking and looking
3
and
months
looking.
ago, and they might, their credit report may expire
Oh.
a week before
But
closing.
don't y'all have to repull right before closing anyway?
No,
Oh.
we do
No?
not re-pull a credit report.
You only have it one time now.
As long
And
as the credit report is valid through the closing date, we do not re-pull credit.
I thought y'all always had to repull credit.
No. So what
right
you're
before
talking
closing.
about is if they open it, we have a monitoring service that we use throughout the whole transaction that alerts us if they have their credit pulled
So you're
or
kind
they open new debt. But we are not looking for a new score.
you just
If that report
what
is
you
still
got is
valid.
what you got.
Exactly.
Mm.
I had no clue.
Me neither.
So the other thing we brought up overtime commission. You could
Mhm.
ask, does the buyer need overtime or commission to qualify? If so, have you verified that information?
Oh, uh-huh.
To know if they qualify with that
Let's back up one.
information.
Okay.
This is a question we got from a listener. Is it appropriate for the listing agent to contact the buyer's lender?
Sure.
I was like, yeah.
Yeah. It's our
Yeah,
job.
it's
Like
fine.
that doesn't upset you if the listing agent calls and is like, hey, Jamie,
No, especially in this market when you have multiple offers.
because
and
you
you're
want
trying
your buyer to
decipher.
win.
Absolutely.
I have said before too, I like to send out the email as the listing agent, hey, I just got a offer with a pre-approval letter from you. It is attached. I just wanted to verify that you feel confident with the terms of the contract attached, getting to the closing table. And sometimes I'm just doing that to see if they respond.
Yeah.
Because
Right.
this is going to let me know
Mhm.
how is this transaction going to go. Do you
Mhm.
never respond? Do you respond rude and offended that I actually asked a question about your pre-approval letter?
Right.
Are they gonna respond and say, I'm not talking to you because you're not the buyer's agent? All of those things let me know, how is this gonna go?
Right.
Yeah.
You know?
Right.
I just want to know if they respond, what's your response time?
Right.
What about on that note, when we get a pre-approval letter, what is the difference between a pre-qualification
Right.
and a pre-approval?
So a pre-qualification is basically a conversation.
Okay, it's like,
You know,
not
it's really
really-
nothing.
Hey, I would like to buy
It's
a
really
house.
not right. It's
And you're
not
like,
really worth
right.
anything. Maybe they talk income, maybe they talk credit score and debts and things, but it's not really.
Nothing's been verified.
So that is a confusing thing, and it's
It
often
is.
used interchangeably.
Yes.
You know, a pre-approval is credit report pulled. You've run through the underwriting system and gotten approval, income and asset documentation. You know,
Mhm.
I mean, it hasn't actually been sent to an underwriter most of the time.
You don't send pre-qualification letters.
No, it's
No.
really
Like, that's
a pre-approval.
Is what you need.
well, right. I mean, I guess some.
I mean, the term is used interchangeably though.
And it should not be.
It should not be. But I would say just look for whether they call it a
Because the letter's
pre-approval
gonna have
or a
information.
pre-qualification.
right.
Look at the verbiage.
What is in the letter?
What is it saying? Is it saying that they pull credit? Is it saying that they reviewed
Mhm.
income and asset documentation in writing?
Yep.
Or does it say verbally?
Right.
Does
That's a big
it
deal.
say that the file's been run through an underwriting system?
Yeah.
So don't get caught up too much in the pre-qualification, pre-approval.
Mhm.
Okay.
Look at the letter.
Okay.
Okay.
That's what I would
look
recommend.
at the letter.
Look at
Got
the
it.
letter.
Okay. What is the biggest common mistake buyers make during the loan process? Wait, before you tell me, Jamie, you have a document that I put in my buyer folders that's the 10 commandments of loans.
Oh, that's right.
And it's
That's
like,
right.
don't do this, don't do that. But what
Right.
are the common mistakes buyers make during the loan process?
I mean, it doesn't happen a lot on my files, I would say, but it has happened where someone will take out a new debt
Yeah.
in the middle of the transaction. That's probably the biggest mistake that they make.
What about
Okay.
putting $25,000 of cash into their bank account that they've been stashing under their mattress?
Cash deposits.
Well, if you've done the pre-approval and you've gotten the bank statements and
Uh-huh.
you've verified that they have the money to close, that's seasoned, you know, you
Then
would
it
see
doesn't
a
matter.
big deposit like that.
Okay.
That wouldn't matter.
Got it.
If we verified,
Then
you
you're
know, their
fine.
assets and they made a big deposit after the fact, it's not even going to come up.
Oh, that's interesting.
I
But
didn't
the
know that
other
either.
thing is, I would say not responding quickly to what the lender is asking for.
Right.
Oh, like we need this.
Right.
Yeah.
Exactly.
On
There's a
that
time
note,
frame, you know,
they
on a
don't-
schedule.
Yeah.
Right.
I feel like this is like an expectations thing. Buyers don't understand when I get this all the time. I provided everything that they asked for and
Uh-huh.
they keep coming back asking for more. They're
Right.
not understanding underwriting,
Oh, good.
reviewing, and then
Right.
needing follow up based on what they've received. Like, how many times
Right.
does it go to underwriting?
Hold on.
Yeah, I can
Before
go over
you
the
start,
process in general.
What actually happens in underwriting and why is it so extra?
All right, y'all are throwing a lot at me. No, I'm just
Yeah,
kidding.
we're ready.
Okay, so
Tell us about underwriting.
let's walk through the process.
Yes.
A buyer comes to me for pre-approval. Okay, I'm going to request a certain amount of documents, so I feel confident that they would close on this loan, that they're
Okay.
pre-approved, income, assets, and all that. But the documentation requirements are very detailed. All right, so let's say it takes them a month to find a house.
Okay.
All right, and now we have a purchase agreement and we're starting. Well, Jana, my right arm,
Mm-hmm.
okay, is going to review everything we already have,
Mm-hmm.
and she is going to send a list to them of what we need updated.
What's her title?
She is my assistant.
Okay, a loan
Yeah, my
officer,
teammate.
assistant.
Yes,
Okay.
well, exactly. So we might need an updated pay stub. Maybe I didn't ask for the driver's license up front because that's not really that
Important.
consequential
Like, you
to
probably
a
are
pre-approval.
who you say you are.
Right. I mean, I may ask, but maybe if they don't send it, sometimes they don't always send
What you asked
what I've asked for.
for.
But as long as I've got what's important,
Yeah,
and
then it's
crucial,
okay.
I'm okay issuing the pre-approval letter.
Okay.
You know? So she's going to ask for that information. We want to submit as clean a file to underwriting as possible.
Okay.
So an underwriter is a person, all
Mhm.
right, that's trained in the guidelines of the loan. While loan officers are important, the underwriter is the one who actually gives an official approval of the loan.
Right.
All right. And they have guidelines that they have to follow. All right. It's not their fault that we need 2 months most recent bank
You
statements.
just gotta
Right.
do it.
We just have to meet the requirements
Okay.
that are set, right? So we're submitting a very clean file to underwriting. There just always seem to be something.
Sure.
Mhm.
Hopefully we've done a great job on the front end and maybe it's nothing. Maybe
Mhm.
it's, but
Is
they
there
call
a
a
most
one-touch
common
file a unicorn.
A one to like where they didn't ask
Yeah,
for anything.
Where they didn't ask for anything.
A unicorn.
What causes follow-up documents needed?
So, like I said, Jana reviews, we get the items we need, submit to underwriting, the underwriter reviews. She might say, oh, we just need a letter of explanation on this address that showed up on the credit report. Which
Oh.
usually we
I
would
mean,
catch
like,
that on the
that's
front end.
so
Easy.
like, why
Yeah.
would you even know to
But I would say if you're going back to underwriting multiple times,
Yeah.
something
Then-
fishy's going on?
well, I would say that the pre-approval probably wasn't
A solid
Very
decision.
solid.
They didn't get what
Exactly.
they needed up front
Exactly.
from the beginning.
Exactly.
And you have your underwriters are in house, like they're
Correct.
part of your company.
Right.
I know that you have helped me before by saying, okay, well, like we would have a question about a weird situation, be like, I'm going to go ask the underwriter.
Right.
Like I'm going to go straight to the source because
Are they like
Exactly.
in your building?
They're not in my building. We have another building on Jefferson Highway that
In
has
this
all the
town.
operations staff.
it's in this
But
town.
They're
She
not
could go
this
see them.
mysterious.
Yeah.
They're real
Persons.
humans.
They're like
They're
the
real
Wizard of
people.
Oz.
They're
That's
real-
right. They're real
They
people.
are like the Wizard of
Yes.
Oz. Okay, well
But
here's a
to your point, Katie, if there is a question on the front end about a file,
Yeah.
about a person's particular situation, that needs to be vetted in
Mhm.
advance.
right.
So
Part of
y'all
the pre-approval.
have in-house underwriting.
Correct.
What does it mean if somebody doesn't? Like a company does not have
Yeah. Well, they could
in-house?
outsource it
Okay.
potentially.
So they're like third.
So
party,
there's
a third
another
party.
Wizard of Oz
Right.
that is taking loans to review from all different companies, and that's just their job.
that does exist.
Okay.
But also, most of the time, it's going to be a broker.
Yeah, it's a mortgage broker. So
A
they're
broker
they're
who's sending
it.
their file to a lender's, who has their own.
They
underwriting
shop the
staff.
lenders
They're
and-
wholesale lenders that brokers are sending to.
Mhm.
Okay.
They have lenders out there that all they do is service brokers.
Mhm.
Does that make sense?
Yes.
Okay.
Yes.
So, but so you don't have to answer this. So a local lender is probably preferential to a local broker because the local broker could be sending it off to any number of lenders, right?
Like you,
Most brokers are sending to national wholesale lenders that are not local.
Got it.
There are some local wholesale lenders here in Baton Rouge.
Got it.
though.
Mhm.
Okay. So as a buyer, you might ask your lender if they had an in-house underwriter because as far as timing goes, that's usually preferential, right?
It is.
Okay.
It is. And
All
they
right.
just have more local knowledge if, that underwriter is reviewing the
Oh,
appraisal. We as a company don't use an AMC.
Right.
So we have local appraisers that we've chosen. That
Tell
are
the
on our
people what an
list.
AMC is.
Appraisal management company.
So like a third party that's
A third
hiring
party.
the appraiser to do
Correct.
the appraisal and is the middleman.
Right.
so y'all have
Exactly.
no middleman?
We have no middleman. It's still randomly assigned.
Yeah, but you have
You
a
know,
list of appraisers.
We do.
Okay. And you can
So
then
there's a
communicate-
$10 fee that the appraiser pays when they
Uh-huh.
accept from us, an
Okay.
assignment.
But AMCs charge heavy fees.
they could take
half
$50
your-
to $100 of an
Yeah,
appraiser's
like that.
fee.
Wow.
Yeah.
Okay, but so then if there's a trouble with we're gonna come back. Actually,
Okay.
let's just do
Yeah,
appraisals.
let's go there. Yeah.
Okay, so if there was
Uh-oh.
trouble with the appraisal,
Yeah.
since you're, you don't have the AMC involved,
Right.
can you, Jamie, talk to the appraiser? Who from your office is allowed to
Right.
talk to the appraiser?
As a loan officer, I'm not really supposed
You're not
to
supposed to.
communicate.
Is that a real
especially
rule?
when it comes to value.
Is it just frowned upon?
Yes.
It's a real rule.
No, it's a rule that
Okay.
Yeah.
I'm not supposed to discuss value with an appraiser.
Okay,
Now,
so who can?
our branch manager can to some degree, but typically not even the branch manager. It's mainly our underwriting
The
manager.
underwriter
Yes.
can
and we've ordered new appraisals.
yeah.
I mean, I've
When
had
is that allowed?
2 recently. Well, it's going to be up to the underwriting manager. They're going to review it and determine if they think it's
Okay,
basically
this is
not worth the
great.
paper it's written on.
Can the agent, the listing agent
Mhm.
or the buyer's agent, an agent involved, what can they do to help the underwriter see that the appraisal was maybe not accurate? are they allowed to like send a rebuttal or what?
Oh, absolutely. They
Yeah,
can send
what
a
can
rebuttal. They can point out the issues that they see on the report.
Mhm.
They can provide additional comps that maybe
Mhm.
were not used, or if comps were used that really aren't good comps, you can
Right.
explain why. I mean,
Okay.
you can provide as much information.
And you're able to give
Yes.
that to your underwriter, and then
Yes.
they decide if you need to
Yes.
reorder the appraisal, or do they also send it back to the original appraiser?
They will try to make it work with the original appraiser
Okay.
first. And sometimes it's just not the answer people want. Sometimes
It is what
Yeah.
it is what
It is what it is.
So the underwriter could say, I feel like this is a good appraisal. We cannot order. Or they could say, I think that this warrants ordering a second appraisal because of this reason.
Yes.
So is there a loan? I know, like, is there a loan type that you cannot order a second appraisal? Like a VA loan? Like, I know it's like follows the life of the.
Yeah, but could you argue it on the front end? But then once they say,
Right. I think you could still argue it.
but once they
Mhm.
say, no, this is
Right,
what the
then it's
value is, then
Like
it's stuck.
FHA, it's tied to the case number for a certain amount
And
of time. And VA, I
How long is that?
think it's 90 to 120 days.
That appraisal is
Mhm.
tied to that.
Mhm.
Okay. Okay. Have you ever heard of appraisal insurance? That was a listener question.
No.
Okay.
I have not.
So me neither.
Yeah.
All right. No.
Mortgage
No.
insurance,
But not appraisal insurance.
which oftentimes can be confused with actual property insurance, the home.
Right.
Oh, yeah, that's
Right,
true.
right.
That can
Yeah.
be confused.
Why do appraisal delays happen, and who determines when the appraisal comes back? So I guess how
So
does
I
the
can
timing work?
Speak to our company.
Okay.
Our standard is to request a due date of a week
Okay.
from ordering.
I feel like that's pretty common. I hear
Yeah.
that a lot.
We can order rushes.
Okay.
The problem is really and what determines how quickly the appraiser can get the report back is their workload.
Yeah.
How busy
It's
are they?
different
How many
seasonally.
report? Exactly.
Yeah.
So what's going on? If we order an appraisal and we ask for it back in 2 days, it's probably going to get denied. And
Okay.
we're going to go through multiple appraisers before it even gets assigned, which could take days.
That could
Sure.
take time.
So you're wasting time by
Trying to rush
pushing
it.
it too much.
Yeah.
Right.
That makes sense.
Hmm.
Okay. Why do appraisal? I guess that makes sense too. Why the delays happen? It's just on their schedule.
Right.
Okay.
How busy are they? In some markets,
Is the
appraisers
property
are
far
completely
away?
overwhelmed.
Yeah.
Right.
Is it rural? Is
well,
it
that's
unique?
true. Right.
Is
So you
it-
bring that up. I have one that's, in the diversion area, and it's somewhat challenging to get to. And so there may be an additional trip fee,
Yeah.
that the appraiser would want to charge. So we went through multiple appraisers trying to get it assigned, and they were going to go with an AMC because they couldn't find
Nobody
anyone
wanted
to
to
do
do
it.
it.
But I remembered I did one last year, and I found the appraiser who did that
Oh,
particular
wow.
He was
transaction.
on your list?
And they were able to, yes, he was on our list. They were able to just assign it to him,
And
which
he
worked
took
out
it.
well.
Okay.
Yeah.
Makes sense. Okay.
Jamie to the rescue.
I try
I
not
know.
to use an AMC.
Well,
Sorry.
right.
Sorry if there's
Why-
any
No, that's
AMC.
helpful. Like, what
Yeah.
does that even mean? Like,
Well,
why?
it's always harder when you add another layer. So when another.
Yeah, and I just don't know where that appraiser would potentially come from.
Yeah.
I'm used to the appraisers that are on our list that we
that are local.
that
Do
are,
you-
we know are local.
Since we're on
and-
appraisers, do you remove and add appraisers frequently to your list, or they're kind of like
Not frequently. I
Okay.
think there's kind of a process they have to go through. Look, you can't just remove an appraiser because an appraisal comes in low.
Well, not one, but
You
like
know. If there's,
habitually
if
a
there's
problem.
consistent issues,
Yeah. Okay.
yeah.
All right. You go with appraisals?
Yeah.
Okay. What kind of stipulations on a contract can cause loan issues? So when agents are writing a contract,
Mm-hmm.
they like to write all kinds of floofy random stuff in there.
Right.
Where to come furnish?
Right.
Right.
What things cause a problem on the loan, and is it more specific to certain types of loans that is even a problem?
Well, personal property is always kind of
Right.
the sticking point.
when you start asking
know.
for the bed and the
Right.
But
So the
certain
reason
things-
being is because y'all are wanting to make sure that you are financing the house only,
correct.
and that they are
And not
not also
movable property.
financing the couch and the boat and the furniture. That's
Exactly.
why y'all don't want it
Exactly.
on there.
Put
Okay.
that in a separate addendum, please.
Okay.
right separate.
Repair stuff.
Allowances for repairs and
Right.
stuff
So
like that.
I mean, do you have? I'm sure you get them all the time. I am like hardcore about. I'm not going to send you the repair request that has an
Mm.
allowance because that
Mm-mm.
feels like a red flag to my lender.
Right.
Like
you need a
there's-
clean
sin-
addendum.
Correct.
yeah.
Okay.
Let's just make this easy.
Got it. Are there any
We have
other?
enough challenges, right? Like,
Are there
let's
any
not add
other
more.
things that make
that maybe cause a loan issue? I guess timing, like closing date, or is there anything else that people write in there or do that in the terms that makes it hard for you?
Those are really the two
happen.
main things that
Okay.
we would run into.
Yeah, you don't want to know
And that's
about
an easy
repairs.
fix.
You don't need to be involved in it.
Right.
And
no.
you don't need to be involved in any personal property that's being bought or sold.
Exactly.
Right.
Just that's a separate.
If
Transaction.
another thing I'm like, is this a rule or is it just frowned upon? Is it allowed for a seller to give money? Say we negotiated $2,000 towards repairs, but they've already paid all the closing costs, and at the closing table, the seller wants to write the buyer a check for $2,000 so that they can fix the front porch themselves. Is that allowed?
There's just no reason for the lender to be involved,
Okay, that makes sense.
right?
Yeah.
I mean, that doesn't need
Okay.
to
At
be
what point
involved
does it
in
become
the
loan fraud?
Yeah, because is it certain loan types?
We don't want to go to jail.
right.
I don't want to go to jail or
Well,
lose my
like,
license.
the issue with the loan is like, okay, if the seller is already paying the max concessions
For the
that are
loan.
allowed for the loan,
Okay.
and then they're paying additional money, then you're kind of getting into
Like a.
a sticky issue.
Mhm.
If it is, but what's really the difference between giving some money towards the repairs or making the repairs?
Right. Well, sometimes the way
So,
we get around this is having
you know.
to put it in escrow at the title company, like in the account, so that then the vendor gets the money. It's not
Right.
it's not that my seller handed it straight to the buyer.
But when
And that's
there is
fine,
a
like-
repair escrow, y'all are involved in
Only-
that because you see it, right?
We don't see it if it's on the seller side. If
Yeah,
you
we're
are
not.
holding proceeds from the seller
Okay.
to do, like I had one recently where the seller was paying to replace the roof
Mhm.
and she didn't have the funds until
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 closing. That happens
So
all
they
the
took some
time.
of her proceeds and they put title, held it in an escrow. It's fine. It's on the seller side of the CD.
So it doesn't
Our
matter.
buyer's loan is not involved. It's not a problem.
That's very helpful.
That's very helpful.
Yes.
Okay.
Now, but sometimes the seller doesn't have the money at all, right?
Okay,
And
right.
there's some repairs that need to be made. That we can do a repair, like an escrow for repairs from the buyer's proceeds.
Oh.
It's only certain things that are allowed.
Like if it
They have to
made
get
a
an
difference for the
invoice.
loan.
Right, but it needs to be done, right, for the
that
loan.
could be rolled into the loan, you're saying?
It's not rolled into the loan. In this case, it would typically it's more cash that they would bring. So they would get an invoice for the repair.
Mm-hmm.
They would collect like 1.5 times the amount needed for the repair to hold in escrow that the title company would have.
Okay.
Okay.
They would issue the check for the repair once it's done.
Uh-huh.
We send the appraiser back out to verify the repair is done.
Ah.
And
How
it's
does
usually
that help
it's
the
minor
buyer?
because it allows them to
Because
go ahead and close.
the appraiser was saying no.
Oh, I see. Okay.
Like,
But the seller couldn't do it.
Right,
Wasn't
right.
able.
surely this has
whatever
got to
reason.
be like an FHA.
It just depends. Most of the
DA.
time, because it's more of a
Like
more
a-
particular loan type with the
Okay.
condition of the property. Let's say
Okay.
it's peeling paint,
Peeling paint.
or I had
Missing
one
handrails.
time when it was the burglar bars
Oh.
because that's a safety issue.
Yeah.
We're like,
it makes
but it's
it like
minor.
not a window anymore.
Yeah.
But it's minor.
Yeah,
you know,
yeah.
it's not an expensive
Just get someone to
repair.
go
Yeah.
unscrew those.
Oh, and so
Right.
you can do this, and then the appraiser can check it post closing.
Right.
Wow.
I mean, if you're
I did
talking
not
a
even know that.
foreclosure, you know, they're not doing any repairs.
Right.
But that's a minor thing. So that would be a case where a
Mm.
seller just
Okay.
wouldn't be willing to do that kind of thing.
Interesting.
Okay, I like that. What questions should you, as a realtor, ask your lender to decide if you should work together? I hope by this point people have now heard some of
Yes.
like why I work with you or like why you might, but like what is something?
You can. This would be a quick answer.
Yeah. So
Yeah.
years of experience and expertise,
Mhm.
product knowledge,
Mm-hmm.
you know, do they communicate well? I would ask your other realtors,
Yeah.
you know,
referrals.
what do you
Referrals.
know
Yeah.
about this lender?
Mm-hmm.
You know, does he or she do a great job? I would ask the loan officer for their reviews.
Mm-hmm.
They should have them. You know, we use a company called Social Survey,
That's amazing.
Zillow, you know,
Mhm.
whatever the case may be,
Mhm.
you know, provide their reviews. Get a feel for them. Talk to them. Do you feel like they care about your client?
Mhm.
Okay.
Or is it just, are they just that salesy type that
Yeah.
wants to close
Yeah.
another deal?
Yep.
You know, you have a good judge of character when you're
Yeah.
talking to someone. Are they going to go the extra mile? You know, you don't have to analyze someone's credit to help them
Right.
boost the score to get a better rate.
Yeah.
You can still close the loan
Right.
as it is, but are they going to
Like,
go that
that's
extra
next level
mile?
service.
Yes,
Yeah,
exactly.
Okay. What questions should buyers be asking their lender before they hire them?
So they can ask some of the same things, but I definitely would say, ask about the different loan types.
Mm-hmm.
Have the loan officer explain them to you, explain the benefits, drawbacks, why, a particular loan product is best for them. Is the loan officer willing to provide the full fee worksheet?
Yeah.
Like
So
you're saying, are
on
they
that
transparent?
Right.
Right.
How you really to get an accurate fees worksheet, you have to pull credit, right?
You do. You do.
So how many times can a buyer do that before it hurts them? What's the truth on all that?
So everything that I've heard is that they're not going to penalize, the bureaus aren't going to penalize you for being a, good consumer, maybe getting a few options. And it's supposed to be within 10 business days or so for the same purpose.
If they pull credit at different lenders.
So you have 10 days.
10 business days is what I've been told.
I didn't know that. Okay.
That could not be true. It could
Right.
be true.
So that you could shop.
But what I would say is, I feel like, I don't know if it's realtors or just in general, the perception is having your
should shop.
credit pulled is the worst thing in the world.
Right.
Yeah. Don't pull my
Don't
credit.
pull my
do
credit. It's
But
you're
that's
going to
just-
ruin my credit, and it's just not true.
Right.
It's just not true, and it's a very important part of being pre-approved.
Yeah.
Like some people would want numbers or pre-approval without pulling credit. I'm like,
I
it's
can't
not
help you at
possible.
all. Yeah.
And what I always try to say is, look, we have to do this. And when I do it, I'm going to look to see if there are any issues that we could
Right.
work on. Like I'm talking about boosting the score,
Yeah,
getting a better
homework.
interest rate.
Yeah.
Well,
know?
that's always what I like to share with buyers too is do this early, do your application. I don't care if you want to buy in 6 months. Do your application now.
Mhm.
Pull your credit now. What
Right.
if you could increase your credit score?
Right.
Like,
Yeah, you want to minimize it. You
Yeah.
don't want to go to every retail outlet and open a credit card to
Right.
get the discount.
no.
You don't want to go. Pulls do impact the score. I'm not
Yeah.
saying that,
Yes.
but it is a necessary part of buying a house.
I've had a lender
Don't
say, I
open
just
credit
wanna-
cards or
Yeah, everywhere.
auto loans before you want to buy a house.
I have had a lender say, so I pulled their credit and I saw that this loan company has
Mhm.
pulled their credit and this loan company has pulled their credit.
Right.
And they have
They've been all over it,
They've been
yeah.
all over. I'm just letting you know,
Right.
that I see this. And I was like,
so funny.
wow, I never thought that, ABC company can see that Main Street Lending also pulled the credit.
If they've pulled it prior,
Yeah.
we can see.
Mm-mm.
Interesting.
So
Very interesting. Okay. This one. How do building loans work?
Construction.
Construction. loans.
construction loans are
So it's very
typically
confused.
well, they're typically interim loans.
Right.
All right. So they're not your permanent 30-year fixed rate mortgage.
Mhm.
They're usually typically good for a 12-month
Yes.
time frame. You're going to have to get a licensed contractor.
Mhm.
For the most part, not always, a set of plans. They do an appraisal subject to what's going to be built.
Yep.
So there's a draw schedule. And
Yeah.
what that means is when the project reaches certain milestones.
Yeah. Like once
They're
you have a
going to-
slab, once you have.
Right.
I've done this a couple of times,
Exactly.
so I know.
So you probably could answer this question.
Well, I mean, it's fine. It's
I'm just
it's very in depth, and I do think that buyers in general don't understand.
Right.
And a lot of times they go and buy a lot, and then they think, oh, then we'll just get this construction loan. And it's a lot of work on the front end of a construction loan,
Right.
With your
It's
plans,
just a
and
lot
your
of
builder-
work
Yeah, it's a lot of work.
to build a
Is
house
there
anyway.
other options, or is that like the loan you go with?
Well, there's one-time close construction loans. There's two-time close construction loans.
Which one's better?
It just depends.
Okay.
Not everyone's eligible for a one-time close. Requirements are different with different lenders.
Okay.
You really,
Yeah.
it's somewhat of a complex topic, but
Do you do both
they're interest only
at your
payments.
company?
We do. We
Okay.
do both.
Yeah, it's interest only. That's why
Interest
the speed
only.
of construction is important because you're just paying interest.
Right. And you're paying interest on the amount that you've drawn.
Yeah,
So,
it changes.
exactly.
Okay. We're not going to get any deeper into that.
Okay.
Someone asked that, but they are I will tell you, as someone who has gotten to construction loans in my life, they are very complicated.
Yes.
Every bank and lender has slightly different,
Right. Some local
rules.
banks will allow you to self-contract,
Yeah, I
whereas
did.
we don't.
Require
Yeah.
a builder.
We want a licensed
Right.
contractor.
So it's just, there's so many
Right.
facets to that. So we're not going to stay on that. Okay. This is my favorite. And we kind of talked about this recently in our multiple offer episode based on your
information to me, but we're going to
Okay.
do it again. What are ways a lender can help a buyer win in multiple offers?
Okay. So
This could be a rapid fire answer.
Okay.
I
Several
think.
times recently, I've had to work with the buyer to discuss lender credits.
Mhm.
All right, you're talking more the first time home buyer where they need closing costs.
Okay.
It's very difficult to get that in the market these days.
Yep.
So they may need to look at other options.
Mhm.
One of those being slightly increasing their rate and getting a larger credit from the lender towards their closing
So
costs.
basically, the lender is covering some of the closing
Exactly.
costs.
Talking with the buyer up front before they even put in an offer so they know, hey, I don't need all those closing
Yeah.
costs. That's number one.
That would be huge.
Making sure they're pre-approved with a local reputable lender. I'll share my reviews. So that way,
Mhm.
again, I mentioned that to you. The listing agent can see this is a reputable lender. This loan's going to close. Feel
Mhm.
confident. I'm willing to, and I'm sure most loan officers here would be willing to call the listing agent
Mhm.
to talk through, the buyer to
Yeah.
reassure them.
Well, just give them some confidence.
Yeah.
The other thing is, and this is only on your buyers that have larger down payments, 10 to 20%, most of the time 20%. The loan may not require an appraisal.
I've been getting a lot of waivers lately.
Yeah.
I think that's great.
Yeah. So the lender's going to need the property address, the amount that the buyer is planning to offer. They can run the file through the underwriting system and they may get a waiver.
Yeah.
So
we
what
can
that
know
means
that
is
before we even write the offer.
absolutely.
That's when you would want to know it.
Yeah, that's when you would want to know because
Yeah,
if you,
that's how you write it. No appraisal.
right.
Yeah.
So if the loan doesn't need
Any
an
chance
appraisal,
that could get
you
kicked
could
back?
waive it. Well, it could if the terms change. I've seen it change if the price changes. If the down payment changes, obviously
Yeah.
that could affect.
I would just hate
it.
to put not contingent and then something happen in underwriting and then be like, oh, actually, yeah.
Well, the underwriter can't just say,
Change
"Oh,
that.
we need an appraisal." It's all about the underwriting system, the computer system
Ah,
that is
okay.
going to request it or
Gotcha.
not.
So as long as the offer they made, the number,
Right.
and their down payment amount stayed the same,
Right.
and nothing changed about those
Right.
terms, then that appraisal waiver should be
It should-
accurate.
Exactly.
I mean,
But
that
I
you
think-
could write it in that way.
Yeah,
though.
yeah.
Yeah. So then you just waive the appraisal contingency,
I
and
mean,
then
that's
there's no
huge.
risk of
That
them
is
having to come out of
huge.
pocket.
Yeah.
Right. In this market,
It's
like
huge.
sellers will love that.
Yeah, that's
Right.
huge.
But I think
Especially-
having the conversation, with your buyers is
Mhm.
very important on
Well,
what they're
right.
waiving.
well, your buyer needs a lender who actually knows what those options are.
Right.
And why they're useful in them getting the house they want, especially in a seller's market.
And the agents all need to know that that's even available.
Yeah.
So speaking with the loan officer,
Yeah.
if you have your go-to lender, they're
Find out if they can do that.
sharing that.
If you know
information
your
with you.
buyer's putting 20% down to ask those questions.
Yes.
Okay.
They say it's 10%. I haven't gotten any waivers with 10% down.
But
I
20
have
is-
on refis,
What about like a
but not purchases.
20 is pretty I mean, that's the ones I've gotten.
Yeah,
They've all been 20 or
Mainly,
more.
yes, 20% down.
Okay.
Yes.
All right. What's the hardest part of being a lender?
I would say,
Being grilled by agents all the time?
well, I can handle it. I got this. No, but balancing doing a quality job, thorough pre-approvals with meeting the high expectations of speed
Yeah.
Oh, yeah.
that agents and buyers
Quality
want.
and speed.
Yes,
I mean, that's
everyone
hard.
wants everything,
Right away.
Right
You're
away.
like, but I need to do a good job.
but quality can suffer when it's done too fast.
that makes sense.
I would say
mean,
that's the hardest
yeah.
part. And I'm a people pleaser, so
Yeah.
it's like I want everybody to be happy, and I
you
want.
want to do it
But
fast.
sometimes you just have to
I
set
think
the boundaries.
Yeah.
Yeah.
Expectations, reality.
Right.
Okay.
And I think kind of putting it back in their court and letting that I can operate as quickly as you can.
Right.
How quick can you get me this list of documents? And I can
Right.
get you the pre-approval.
Exactly.
To
And the
where it's
people
not
will
me,
ask-
it's you.
Right. People ask, how long is the pre-approval going to take? Well,
Yeah.
depends on how complicated your
Yeah.
situation is.
Right.
If you're W-2, it's straightforward, and you get me the docs quickly, it won't take long at all.
Yeah.
So,
Okay. Last one.
all right.
I like this one.
How do you survive being a mom? Tell us, first of all, how old your kids are and how do you survive being a mom of 2 little people and a full-time busy lender?
So I really have 3 children. My husband, he's
that's
he's
true.
a child sometimes.
Uh-huh.
I'm just kidding. Love you, CT.
Love you, CT.
So 5 and 3
okay.
are the ages of my children.
So cute.
They're awesome. They have me wrapped. But how do I survive? I would say number one, having a great person that helps me, and that would be Jana. She's been with me for 4 years. I've had an assistant probably, I don't know, at least 7 or 8.
Mm-hmm.
But having someone, that can just help me balance the workload, takes the, just balancing that workload. That's huge. That's been,
You're pretty
because
good
really
about
it
ending
helps
your
me
day, though.
provide better service.
Yeah. Do you end your day and like stop taking calls at a certain time in the evenings when you're doing bath time? And like, how do you do that? What's your routine?
So you have to be somewhat flexible. Okay. I'm not going to say I'm absolutely like by 5 o'clock, I'm not talking to you. I'm not communicating.
Yeah.
But you do have to set some boundaries.
Sure.
Yeah.
I mean, I had someone texting me about their CD at 6 o'clock last night, and I said, look, I can call you in the morning.
Yeah.
What
Yeah,
time?
That's great.
What time are you available?
Sure.
But,
That's good.
I had another client who was putting in an offer last night, and they needed a pre-approval letter.
Mhm.
So I sent it at 9 o'clock.
Yeah.
So it's determining what is actually
Urgent.
super urgent,
Mhm.
and what can wait.
You know what I started doing too? If I didn't have like an updated one and I'm making an offer, I'll send the offer and copy the lender and say,
Yeah.
hey, Katie, listing agent, here's my buyer's offer. I'll have an updated pre-approval letter first thing in the morning. The lender
Right.
is copied on this email. When I see the lender is copied on the email, I'm
Mhm.
like, that's basically
Right.
my
Right. Well, it's your open communicate. Like, you want to
Yeah.
send an email back to the lender? Go for it.
right.
Right.
Yeah, the lender at that point is not going to say, oh, wait, they're not pre-approved.
Right.
You know what I mean?
Right.
Yeah. And I said, do you need it tonight, or can I send
Yeah,
it in
yeah.
the morning?
Yeah.
And she really wanted it. So that's fine.
Right.
Mhm.
It's fine. But like I said, determining what's actually
It's
urgent
actually urgent.
and what can wait,
Yeah.
yeah. Putting the phone away
Mhm.
certain times,
Mhm.
when I'm with my babies
Yes.
and my family and dinner time and all of that,
That's
is
good.
important.
Super
or you'll lose
important.
your mind.
Yeah.
You will lose your mind.
And your family.
That's
Yeah.
right.
I mean, you just won't be able to do as good of a job because you just be burnt out.
Yeah. Oh, yeah.
I think
Such
that's
a good
so
point.
important.
Definitely.
You good?
Do you have a toast for us today?
Yeah. Who would you like to
Yes.
toast to?
So Jana,
Okay.
Didia, my assistant or teammate, whatever you want to call it, she keeps me in line. She puts up with me.
She's
She
a
will
listener,
laugh right
too.
now because she will say, "That's right, I put up with you."
She's
I'm
great.
a little OCD, so
Uh-huh. Oh, I love it.
yeah,
Okay,
She keeps
so
you organized.
she does. She's
she's
wonderful.
right on top of it.
Yep, I would not be able to do what I do without her.
We all
That's
need
for sure.
help.
We were just talking about
Love
this.
you,
I have
Jana.
one last quick question.
Okay.
When you just get random inquiries,
Mhm.
how do you remember to follow up? What's your system for like when somebody's like, hey, I want to buy a
Yes.
house? I'm sure you get them so much,
Right.
but how do you remember everyone?
So typically, what I do when I have something that I need to do or follow up with, I'll email myself.
Yeah.
I'll email myself, and then I have a to-do list, a running to-do list. If it's important, I highlight it. If
Yeah.
it's not important, it's not. I just have my own little
That's your system.
system. But if I have an application on someone,
Yeah.
Then it's-
we'll be following up. I'm actually in the process of refining that
Oh,
process.
I love it.
Because if
You
you,
should watch our Trello video.
what's the video?
Oh, Trello.
Trello.
We'll tell
Oh,
it to
wow.
you after.
Yeah.
I'm intrigued.
Yes.
Our listeners
You
love
write that
the
down.
Trello video.
They love
Trello.
Trello.
Okay.
We'll
Love
hook you
it.
up with that. Okay, so we're cheersing to Jana. She is amazing.
Yes.
She's actually listened to the show before, so
She's on a much deserved vacation right now.
Good for
Yay!
Jana.
Okay, I love it.
Great.
Yes.
All right.
Cheers. Thanks
That's
for
it.
coming.
Yes, thank you
Thank
for
y'all for
coming.
having me.
This was
Wonderful.
so
I hope it wasn't
wonderful.
too boring.
No.
Oh no, the
Lynn,
people.
Is there a reason you've had 99 episodes and no
Lynn,
lender?
We
Is
were-
that
I think we
The
were
questions for lenders
we're building.
Yeah.
we're building up.
Gotcha.
Like at first it was just a question here or there that we kind of know the answer to just
Yeah.
from
being in
They were
the
getting a
business
little
long?
too technical.
Gotcha.
we're like we need a lender.
And it,
Okay.
yeah, I think it's also, we're very protective of who's on the show.
Okay.
And, we want to make sure people get good quality information.
Mm-hmm.
So it was a good
Well,
time.
thank you.
Yeah.
Oh, thank you.
Aw.
We love you. Okay, goodbye, everyone.
Bye-bye.
Goodbye.
Thank you so much for tuning in to the Hustle Humbly podcast. Let us know who we should toast to for the next episode.
Be sure to follow us on Facebook and Instagram at Hustle Humbly Podcast. If you have an episode, topic, or question, please email us at hustlehumblypodcast@gmail.com.
Be sure to subscribe to the podcast and leave a review. See you next week.
Bye.
This is the good life.